Welcome to the Small Business Spotlight presented by JAISIN Insurance Solutions. I'm your host, Racquel Goldy. The goal is to bring more awareness to businesses and entrepreneurs in the local community. That being said, today I'm joined by Steven Goodman. Steven, thank you so much for joining me today. So Steven, tell me more about SHG Planning and what it's like to be a trusted advisor.
Well, my firm does a lot of different things for affluent families. I would say business succession planning is probably my main niche, and that's really dealing with business owners on the succession of their business, whether it be to their family, to other partners they have, to key employees. I'm not a business broker. I'm not someone who goes out to try to find somebody a buyer for their business. But whether they're doing an ESOP or they're doing estate planning with their children or buy-sell planning with partners, I get involved in guiding people in those areas. I also do a lot of work in estate planning, which dovetails into that. And that would be for both the estate planning for their business as well as other assets. I get involved in sophisticated insurance planning, risk management, different than Jason's business. Mine is more focused in on life insurance, long-term care, and disability. I don't really get involved in health or any kind of general or property and casualty insurance. And as far as a trusted advisor, most clients, if they're doing it right, have a team of advisors that they trust that complement one another. And it's usually one person is usually their CPA. They usually have a trust and estate lawyer involved. They have usually a financial advisor, somebody who may be managing their money, somebody like myself who handles all of those forms of insurance, and then somebody like Jason who would handle other aspects of insurance for the client.
What made you start your own company?
I was working, my background, I started out in public accounting. I worked for about 5 years for a major CPA firm, KPMG. It's one of the big four firms. While I was there, became certified as a CPA, also had my MBA in finance. I then went to work for JP Morgan in their private bank trust and investment division. And right before I was starting a family, I said, if I'm going to take a chance in life and try to go out on my own, this is the time to do it. And basically, I decided to go into my own business. I'd always been very interested in all aspects of the kind of planning that I get involved in, and just decided to give it a shot. And thankfully, it worked out.
Why should wealth management and insurance kind of go hand in hand?
Well, there's kind of wealth management, wealth preservation. Wealth management could also be called wealth accumulation. That's working with somebody to invest your money in the hope that you're going to have a properly diversified portfolio from a risk reward standpoint, and that over time it's going to accumulate to provide you with the money you need to meet all of your needs, both before you retire and after you retire. Life insurance usually falls into the risk management, wealth preservation side of the equation, which are what kind of things could go wrong that would stop you from being able to accumulate the kind of money you wanted to, or be able to pass that money down to your family in a tax efficient manner. And that's where the insurance and the wealth preservation comes into play.
Okay, I'm learning so much today as well, so I'm excited that we're doing this. And why do you think high net worth individuals should have insurance?
Well, let's say we'll talk specifically on life insurance here. It depends. Everybody's situation is different. In the early years, you could have what you would call not necessarily a high net worth individual that has accumulated substantial assets, but somebody that has a very good income. Usually in the early years, life insurance is primarily there to replace that person's income, whether it's the husband or the wife or both. If they're working, you want to know that if, God forbid something happens to them, they get sick and die, and their income goes away, that their family has something to provide them with what they need to live a nice lifestyle. It could also be where you have a business, but the business either isn't saleable, or if it was saleable, the price would be severely hampered by you not being there. One thing is to negotiate the sale of your business while you're alive and healthy. Another is for a spouse to try to do it when you're not there. So the second reason would be to provide a replacement for the asset that's been lost by you passing away. In my business, I'm usually dealing with people that already have a substantial amount of assets. And there, it's usually used for one of 3 or 4 reasons. A, to provide liquidity to pay estate taxes when the husband and wife are no longer there. B, to provide equitable distribution. So if I have 3 kids and 1 is in my business and 2 are not, and most of my money is in my business, and I pass that business down to my son or daughter that's in the business, what am I going to give to my other children? So that's a second reason you would buy it. A third may be buy-sell planning. You could be in business with other partners so that if one of them dies, insurance is used to buy out the deceased partner's estate so that it doesn't put a burden on the business. Then you have complicated situations with second marriages where some individual has a prenup and they're going to provide their money principally to their children from their first marriage, but now they have a prenup and they may buy insurance to provide something for their second spouse so that they receive something if something would happen to them. So, and there are other reasons, but those are some of the, major reasons that I get involved with clients.
How do you decide the proper insurance policies to cover?
Well, there's usually 2 sides. There's how much does the client need, and then what type of coverage. The type of coverage usually is determined by 2 things: how long they need it for and what they could afford to spend on insurance. If the need is temporary, like I just want to have insurance, we're going to sell our business in 10 years, but if I die in the next 10 years, I want to have insurance to cover a buyout. Or if I have a 15-year mortgage and I want insurance till the end of my mortgage, or I have 15 years until my kids graduate from college and I want insurance, then normally you buy term insurance because there's a fixed term of years that you need the insurance for. If somebody has a more permanent need for the insurance, like estate planning purposes, where they need it until they die, or equitable distribution, because at some point they're going to want to provide something to their other kids when they die, or they have a business, but they have no intention of ever selling it, so they want the insurance to be there for a long time, then you normally need some type of permanent insurance. Then you also have to get involved in how much is the right amount of insurance. We could spend hours on that. There's no this is the right way to do it. And at the end of the day, to be honest, how much things cost dictate. If insurance was free, people would buy $100 trillion worth of it, but it's not free. And at the end of the day, what they're willing to spend on insurance many times impacts what I provide to them, even though that may not be what they should be buying, but I don't have any choice because within their budget, there's no other options to provide to them.
Right, I was going to say, I'm sure it's all about budget as well.
Always what it costs is a big factor.
All right, so I was checking out your website, prepping for this interview, and I came across some of your testimonials, and I saw one that really stuck out. It says, integrity, knowledgeable, professional, and one of the most honest professionals I've ever met. How does it feel to have testimonials like this on your website and know that people think this highly of you and trust you?
Yeah, no, well, it's very important. What I say, I know who I am and I know who I'm not. And there's many people that are in sales, whether it's life insurance, real estate, property and casualty insurance, selling cars, it could be any kind of sales profession. There's many people that are very, very successful in selling because, A, they're happen to be very talented as a salesperson. And secondly, they kind of know how to play the game. They're a good golfer, they're a good tennis player, they belong to country clubs, they're great at entertaining people. I get my business not for that. I get my business because the people who work with me feel both in terms of my technical competence and my integrity and honesty, that when you combine that together, that's why they deal with me. They don't deal with me because I'm a good golfer, because I'm not, or I'm a good tennis player, because I'm not. They deal with me because of my character and my intellect, which has really been my selling point. And, that's just who I am.
If there's any piece of advice you could give to someone seeing this interview right now who's possibly thinking about coming to your business for insurance, what would you say?
It's a very difficult business. It's a business that requires you to constantly be bringing in new business. There's no bad years. You have to be out there hustling all the time. To be really, really good in this business, not only do you need to be able to be a good salesperson, but you have to be very technically competent. You have to have great marketing skills. And there's a lot to it. You know, there's in my business, there's like the 1% and there's the 99%. You know, I feel I'm not the only one in the 1%, but I'm in that 1%. And there's such a difference between that 1% and the other 99%. And you would think that most affluent people would only be dealing with the 1%. It's so far from the truth. There's so many affluent people that I run into that the people they're dealing with in my business are from the 99%, not the 1%. They just don't understand what the difference is. So, you know, until they meet somebody from the 1%, they don't really know what they're not getting.
Amazing. Steven, thank you so much for joining me today. I'm so glad we finally got to chat. I'm Racquel Goldy, and I'll see you next time for another Small Business Spotlight.